Welcome back, guys. Nick here. This is going to be another market review, finishing out the week for this past week starting on May 22nd. So for those of you guys that don't know, this is the process that we do every single week. On Sunday, we'll have what we call the Sunday Market Blitz, which is essentially our approach to the week ahead, right? We'll mark up all the charts, present to you guys our analysis, and pretty much, mark up what we expect or could expect for the week ahead. Right now, to close that out, at the end of the week, we'll provide this review, pretty much just seeing how we did, reviewing all these analyses and the trade ideas, and seeing how accurate they were, taking some information away from the chart, away from the markets, based on how things played out. So we can use that information, critique our analysis, get better over time, and apply that for the week ahead. So let's get right into it. We start off every single week analyzing DXY, and this is just essentially showing us the US dollar strength. And we want to be aware of this because it makes up for 80% of all trade and usually is a big driver in a lot of the volume that we see, especially lately. So it's good to kind of just be aware of what the dollar's doing. And we can use TA to, do that, to highlight that. We're not actually trading this. Again, we're more or less using it as an indicator. So if something big is happening or, we're aware of something happening that's, of large impact on DXY, we can then take that information and trade accordingly on other pairs, especially USD pairs. Okay, so here we are on DXY. This is a 4-hour analysis. We saw that we were consolidating in this area, which is right near our 103 zone, this big blue zone here. So we were expecting some sort of reactions there, but we were experiencing a lot of consolidation. And we did have an attempted break here, right? We pushed up, we consolidated, then it followed through. We hit a high pretty much at 105, just over, and then came back from there. So this 4-hour trend changed when we saw a 4-hour higher low break, which was right here, 103.75. Price action broke through it quite a bit, came back, retested, gave us a lower high. And then at this point on this follow-through candle, we're now confirmed bearish on the 4-hour. So this looks like it has a little bit of momentum, right? It's moving through these zones pretty easily, where over here we saw a bunch of reaction. So that's not a good sign in terms of support. It just means that we have a very strong bearish trend, maybe a higher time frame move. So going into this week, we knew that one potential scenario was that price action would range, right? We find support down here at this lower zone of the range, and then we just kind of bounce. That was possible. However, the more likely scenario was, because this is so evidently bearish, we were going to look for a lower high below this range, right? So that means a break of these higher lows here, and we see structure below, and then we'll even be more confident of a bearish dollar for the week ahead. So let's play that forward, see how this worked out for us. And it did exactly as we thought, right? It followed the more likely scenario, very much in trend for the 4-hour here. Broke lower, pulled back, didn't give us a lower high as we would have liked. Definitely would have liked to see a retest of this zone here. But instead it just dropped, consolidated a little bit, gave us a double top right here, right where this 200 EMA is, right around 102.3, and then went bearish from there. So now, we have to reanalyze, which, we'll present to you guys tonight in the analysis that we'll put out. And this will highlight 2 new examples. So it's looking very bearish. I know we have quite a bit amount of room to fall here on the dollar. So it'll be interesting to see with the analysis that we put out. So that's DXY. Now we can move over to first tradable pair, AU. And again, this was put out on Sunday. We had marked this up where we were seeing a 4-hour transition back to bullish, right? So we were bearish over here, descending triangle, made an attempt at this resistance, and then came right back down. We broke 0.7 support, got a lower high, got a lower low. Price action came back up to test 0.7 resistance, and then we actually broke above, got some consolidations, looking like a higher low, just waiting for confirmation. So this was, key signs of a trend change on the 4-hour here, right? We broke a lower high, we got a higher low, we're looking bullish. Okay, so one scenario going into this week was riding the 4-hour bullish trend and looking to target towards minor resistance, and then also ultimately up towards 0.725, right? So it's like a 2 different TP levels. Okay, but even by this minor zone here, we're well over 3.5 to 1 even. So there was a lot of room for this trade. Great risk to reward if it did play out that way, right? The opposite is that this goes back to bearish, and this turns out to be more of a fake out. So price action would need to drop, give us a lower high below, and then a good follow through setup, and then we would enter short on that, target the prior lows, and even lower potentially. So let's see how this played out. So this went bullish again, just rode with the 4-hour trend, right? Pushed above, consolidated, dropped pretty close to our level, 0.7 right there, within a couple pips, and then followed through. There'd be some lower time frame entries in there, and then you would have been in an active trade. And we're almost at TP now, so pretty good. Could keep running too. So again, we'll have to reanalyze this one and present to you guys a new analysis and new expectations for the week ahead. But yeah, good trade here on AU. Definitely bullish. Not showing any signs of bearishness yet. We could see some sort of reaction here, but ultimately, again, as we said, we're looking for reactions up here at this resistance, 0.725. Okay, so that's AU. Nice job on that one. Let's jump over to AJ. AJ was overall bearish. We actually had this trend line here that really highlighted the movement on AJ and how bearish it's been. These swings have been very, very significant. Right, we saw a lower high up here. Price action dropped all the way down towards 88 support. Then we bounced from there, came back up towards 91. And this is the level that's keeping this bearish, right? 91 resistance. As long as we're below it, we're looking bearish. If we're above it and we're seeing structure above it, we're looking bullish, because that would then mean we break these lower highs on the 4-hour, and that's a trend change. Okay, so that would be this scenario here as price action pushes up, breaks these lower highs again, and 91 resistance, comes back, test 91 as support, confirms a higher low, and then we enter on some strong, nice, bullish setups here, targeting towards 92.85, maybe higher, depending. But that was the bullish scenario, right? Now, the most likely is that this overall trend continues bearish. We find some sort of reversal here, break this trend line, get some good confirmations to enter short on, target down towards 88 support. Okay, makes sense, right? Just over, or it's actually 2.7 to 1 risk reward. So good movement there, plenty of room to run. Let's see how it played out. Okay, so this kind of flatlined. We did reject from where we wanted to, right at 91, but it didn't follow through enough. And that would actually be more, right here. Take a look, these two candles. So we have a nice engulfing with a little bit of a wick, and then we have a nice follow-through candle, but the wick on that is scary. So we would have waited for, some sort of closure in a lower time frame, would have seen some sort of reversal happening, and probably would have been scared off. Would have definitely dropped down the quality of the trade per the rules that I use. So this, just by seeing that wick, that type of rejection, that's not what you want to see on a real entry. The real start of a continuation or a trend change, it's not going to show a wick like that. You want it to be, a confident candle, showing conviction, where you look at it and say, oh, there's no doubt that's bearish. A wick just simply doesn't do that, especially one that size, almost the size of the candle itself, right? So from there, it actually rejected, bounced again. Now we were even in more strict consolidation, and now it's pushing up towards 91 again. So we'll have to reanalyze this. No move was made on AJ yet, so we'll technically still have both of these trade opportunities still valid, carrying over into the next week. We'll just have to mark some zones. I can see there's a minor support zone right here I want to be aware of, and then we'll come up with the the new trade scenarios. We'll just draw them in anyway. Draw in the long tool, draw in the short tool, and really make it clear as to what we need to see in order to get into a trade here on AJ. But for right now, definite fake out right here. That definitely caught some people. But we are still technically bearish, so interested to see how this next week plays out. But check out the analysis for AJ. Could be a good move, but I'll post it up, again tonight. So let's move over to AJ now. So we're actually here on the 1 hour. So this is going to turn into quite a bit of price action. I'll try and zoom out a little bit. But what the idea here was on UJ is that we were super bearish, right? We saw some consolidation here. This was the start of the trend change up here, right? We broke 129.6, hit the low at 127, pulled back, formed a lower high, but also consolidated. So it took a while for it to kind of, figure out what it wanted to do and then choose to go bearish again. But because there was so much consolidation, we saw a large move result from that. And then this actually played pretty well, because let's follow it, right? So it broke out. We shot down to the low, somewhere around 127.75, right? Pulled back from there. Almost tapped this random line, which is representing broken structure of this range. and then we got an engulfing. So there would have been a nice entry here as well, shorting back down, right? Catching the first retest, lower high confirmation, entering short on that, targeting prior lows. That's a pretty classic trade in any book. But yeah, there was some good volume there too. See what I mean by a definite conviction candle? See how there's little to no wick there? That's a candle you want to see. That thing knows where it's going. It shows a direction and now it's out. So that's a conviction candle. Okay, so from there, again, we hit the low. Now we're consolidating. We do want to continue bearish, right? Because overall that was the trend. So we were looking for this range to break support, see price action below, get a lower high, and then continue shorting. If this was to continue to reverse actually and go bullish on this 1 hour, we need to see this lower high here break, meaning price action breaks above the range, gives us a higher low, meaning a new structure, and then we're looking for longs from there. So let's see how this played out. So again, quite a bit of price action because we're on the 1 hour and this is a week's worth of data. So what had happened? We broke the range here, then we started consolidating around it, getting some choppy price action, but finally price action chose its direction here on this engulfing, and then this set of candles here up to this final one, this largest conviction candle, that's when everything would have been confirmed. These dojis in here would have been a little hesitant, and this engulfing still within the range is, isn't really the best trade. There's a little more risk on the table if you're entering right there. I would have ideally looked for, this entry candle, or maybe even on this one where we got a little bit of a pullback and then it really chose a direction. Stop loss above that, enter here, targeting down towards, a new low. We would have marked this up through fibs. So that played out great, right? It dropped more than we even thought. Great risk reward on that trade if you took it. But now we can see we're consolidating again. So I'll have to reanalyze this, drag this zone over as it's still in play, look for further rejections from 127.75, and see how much lower we could short this, right? I mean, AJ is overextended. We know that. DXY has been pushing this thing up. It's pure speculation. So this reversal was honestly really nice to see. Hopefully it continues that way. We'll get back to more stable levels and, make some profit along the way. I mean, this is our next target, though, 125. Right, so imagine this zone's drawn over a little more, looking for minor breaks, and then conviction to enter short. So this analysis is probably going to be pretty interesting going into this next week. So keep an eye out for that. But yeah, UJ's looking like it's ready to move. Give us some good trades. All right, so let's see. Let's stop over at EJ, see what EJ's doing. Same thing. We're on the 1 hour here, and the overall idea was that we're going to continue ranging. Right, we had just turned bullish. We pushed back above this range right here, right? We hit 137, price action came down, and now we've been getting more strict consolidation as time goes on. So, right, we started off as high volume. Now price action slowing down, the candles are getting smaller, and now we're just kind of bouncing between 135.5 and 134.5. Okay, so the likely scenario going into this week was that we'd keep ranging. Usually EJ likes to, whatever it does, it likes to do it with 110% effort, right? So if it's going to go bullish, it's going to stay bullish for a while. It's going to really move, quite a bit. If EJ is going to range, it's really going to range. It's going to spend a lot of time, in that consolidation. So that's just one characteristic of EJ. So that's what I thought was the most likely scenario. However, if we were to continue bullish, we were simply looking for a break of the range, right? A bullish break of the range, meaning 135.5 is broken, price action moves above it, comes back down, confirms a higher low, and then gives us some conviction candles to enter on. And we were targeting back towards 137, simply the prior high, and then we'd reanalyze from there. Okay, so let's see how this played out. Okay, so it actually came back down, touched not quite the bottom of the range, but still consolidation. That's what this pullback is representing. This wasn't the real break there. Came back down, pushed up, and then finally it broke on this engulfing right here. Beautiful candle. Now some people like trading breakouts. That's up to you. If you've done the back testing, if you've put your time in, you got the experience on the particular pair, and you notice breakouts are quite profitable, and whichever way you trade them, go for it. That definitely was a strategy I used to implement. I've adapted slightly different now, definitely more patient, but this would be an opportunity of entry and then targeting right back to where we thought, 137. So it came close to that. You would have had to manage accordingly, clip the trade for some profit, but not a bad trade. I mean, it definitely went with trade scenario 2, and after that, after it reversed from near 137, we've just been consolidating, right? And now we can see 135.5 is acting as support. Pretty strong support, actually. Look at the reactions. High volume, right? It comes crashing into the zone, reacts very, very hard, and pushes up. Same thing here. Comes crashing into 135.5, and then reacts super, super hard. Nice morning star right there. Right, so this is going to be an interesting analysis for this week as well. I could already see that one of the likely scenarios is that we'll keep ranging. That means price action will bounce down towards 135 again, see some sort of reaction. That's just the most likely because, I mean, that's the pattern, right? We're just bouncing and moving sideways. There's no direction present right now anymore. So, again, we'll mark that up, see what's to come this next week. But, yeah, very interesting. Very interesting. Yeah, just consolidation. I mean, kind of at the higher level here, closer to 137. Could be some sort of hint. But, yeah, we'll see. We'll reanalyze it. But, yeah, that's EJ. Definitely went with trade scenario 2. So, let's jump over to gold. We're back on the 4-hour. You know, what was gold looking like last Sunday? And this is it right here, right? We just saw a 4-hour transition because this is a 4-hour lower high. So, price action broke that. Now we're looking for higher lows. It gave us one. Started pushing up. So this was like an active trade, and we were looking for this to kind of continue. Shoot back up towards 1870, and then check for reactions from there, reanalyze, and so on. Now, if this were to continue with the overall daily bearish trend, we're looking for a break back below 1830. So price action falls, breaks this level, hits a low, pulls back, gives us a lower high, and then gives us entry candles. So those are our bearish engulfings, evening stars, bearish variations. We're entering short on that, targeting down towards 1800. Okay, so we had our two scenarios marked up. Let's see how price action played out. And it went with trade scenario 1, right? It just completed the active trade. This is already triggered. It went right back to 1870 as we expected. Came quite close. You would have had to clip the trade on one of these reversal candles. Okay, but from there it started consolidating as well. So that's kind of the trend we've been seeing is we saw these early moves and then price action kind of flatlined after that. So there was some opportunity last week. Now, you know, we're getting a lot of consolidation, a lot of ranging on some other pairs. So it actually does make it pretty easy for us to, you know, understand what we need to see in order to get into a trade. So I personally don't mind ranges. It just comes down to, you know, your patience. It's like a test of patience, essentially, when you're experiencing a ton of consolidation. But, yeah, I'm looking pretty positive on this week ahead. I could already see some setups playing out. So I'm going to go ahead and get started on that analysis and put it out to you guys so you know what you're looking at for this week. But this has been another market review, Forex League market review, guys. And, yeah, covered DXY, AU, AJ, UJ, EJ, and gold. We saw some good setups. We saw some good movement. We were definitely right on quite a few of these. But, yeah, guys, good week overall. And, you know, again, check and look out for the new analysis that we're putting out tonight for the week ahead. Okay, but thank you, guys. Take care.